from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the Senate moving closer to passing the $550 billion infrastructure plan, but crypto regulation still a holdup. We're going to get reaction from Circle CEO Jeremy Allaire, the co-creator of a stablecoin worth more than $27 billion, in just a few moments. Plus, parties, dating, and drinking at work. Video game maker Activision Blizzard facing a slew of allegations from current and former employees, calling out a toxic office culture and, quote, frat boy environment. We will dive into the claims with a Bloomberg exclusive report. And scientists at the UN issue a code red on climate change, stating that we will see warming temperatures until at least 2050, and that time is running out. We'll take a look at the latest report and mounting pressure on world leaders to do more. All that in a moment, but first let's get a look at the markets with Kriti Gupta, and it was a mixed Monday, right, Kriti?
It absolutely was, Emily. Like I said, you saw a little bit of mixed picture, a little bit of tech outperformance, or what it looked like tech outperformance on the surface. Let's just dive in here. S&P 500 ending the day flat, was negative by a far larger margin at the open. So you did see some buying the dip, but just not enough to turn it positive on the day. Then you did see the NASDAQ, like I said, outperform. You'd think it was big tech, but it wasn't, because take a look at this. The New York FANG index up just 0.2%, not enough to make that kind of difference. And of course, you even saw the SOX index down 0.4%. If this was a big tech day, semiconductors would be on board. So let me show you what was really driving the market today, because it was really all about commodities. And this is really where you're talking about the China growth story, those Delta variant, the Lambda variant perhaps weighing on what the growth trajectory might look like. So some kind of concerning downgrades coming out of China in terms of the growth over there, reflecting into some of that demand in terms of global growth here in the States. You saw that in commodities. And then, of course, showing up in the stock market as well. You can see that correlation. I want to end with some of the sectors that were actually doing fairly well today. Of course, in this kind of limelight of the variant, you also saw the likes of biotech doing really well, Chinese ADRs doing very well, and of course, at the very end, those Golden Dragon Index stocks doing very, very well, up 3%. So, Emily, that's the macro picture. Let's get to the micro with Ed Ludlow.
Yeah, straight to earnings after market in AMC. Yes, that AMC beating on the top line in the second quarter, $444 million of revenue, a narrower than expected loss. You can see it up by around 4% in after hours. Now had been up as much as 10%. But look, this isn't a stock where investors pay attention to the fundamentals, right? This is a Reddit forum meme stock. Favorite hashtag AMC earnings day trending on Twitter all day long, but one to watch into Tuesday session. I want to look at Peloton, up significantly, the biggest gain in 3 weeks during Monday's session. No hard news, but we do know that US COVID cases are at their highest level since February on a weekly basis, right? Come with me into my Bloomberg terminal and look at this chart. There is clearly some symmetry here in Peloton's share price with different moves in the US weekly COVID rate. What we're seeing is that when Peloton's share price peaked in January, it started to fall as those cases came down. As those cases have been rising since the bottom in May, then again, what we see is that the Peloton share price has been rising with it. Finally, I'm looking at Moderna, incredible gain of around 17% on Monday. That's its biggest gain since November of last year when those approvals were going through for the vaccine. All-time high for the stock. No hard news, but again, according to sources, the US is going to be taking some doses from Moderna to give to Mexico as a form of donation aid. That seems to be supporting the stock on Monday. Emily.
All right, Ed, thanks so much. I want to get back to the latest on the infrastructure bill and cryptocurrency's role in it. I want to bring in our Anne-Marie Horton in Washington. Anne-Marie, what's the latest?
Right now, we are seeing a little bit of a hurdle, Emily, when it comes to that cryptocurrency bill. And it really was a domino effect of procedural votes here in the Senate. So we have Senator Shelby wanting to bring an amendment to the floor, which had to do with more defense spending. And then you have Senator Bernie Sanders wanting to not allow that amendment. Remember, when it comes to amendments, you do need 100 senators to be on board to get that to the floor. So then you have Senator Shelby saying, OK, if my defense spending can't get to the floor, then I am not going to go ahead with this new crypto amendment that earlier today really was a bipartisan effort to try to see both sides of the aisle when it came to the cryptocurrency industry. And that is right now where we have a little bit of a hurdle, I would say, in the Senate. Other than that, a lot of the other objectives of the plan do seem to be like they are getting the bipartisan support. Earlier, a Senate aide had said to me that we could see a vote on this around 11 a.m. tomorrow. Potentially, this new debate regarding defense spending and also the cryptocurrency amendment potentially take us out a little bit longer.
So this leaves language in the bill that could lead to broad oversight of the cryptocurrency industry. Many in the industry not supportive of that. Talk to us about the language as it stands right now.
Exactly. If this amendment does not get to the floor, does not get a vote on, and does not get part of that text, then if they vote for the bipartisan infrastructure agreement without that amendment, then as the text stands right now is where they would be voting on it. And as you say, this is very much so a very broad purview of having data collection to the IRS for many in the cryptocurrency world. And as you say, Emily, many in the industry are against this, including Jack Dorsey, who's been quite prolific on Twitter throughout the week, especially today, tweeting about this, because they say it should potentially be for traders and brokers or people who trade in the crypto space, but not for those that are doing software design or miners. So this is where the language differs, and it does seem to be that it is still taking a little bit of a debate here on the Senate floor.
All right, Emery Horton for us in Washington. We'll continue to follow how this plays out. For more on the infrastructure bill, what it means for cryptocurrency and the industry itself, I want to bring in Jeremy Allaire, the CEO of Circle. Jeremy, thank you so much for joining us. So look, what's your take on the language in the bill as it stands now, the fact that this compromise did not happen?
I mean, there are a few, I think, really important comments here. I think the first is it's been remarkable over the past week to see the amount of engagement between the crypto industry, senators across both sides of the aisle, an enormous amount of work going in and really helping to get members of Congress to better understand the many, many different types of roles that exist in this broader crypto and blockchain ecosystem. There are infrastructure creators, open source software developers, miners, and then, of course, there are the intended targets of this provision, as clearly stated online last night from Senator Portman himself, which is the trading venues where people are trading, and there are taxes that are due as you trade, just like in a brokerage. And so I think the intended focus has been on brokerage-like activity. The language as originally put in overly broad. The bipartisan agreement that many senators brought to the floor, I think, is an outstanding resolution, or at least huge progress over what was there. And we'll see what emerges on this. Clearly, there does seem to be overall bipartisan support for getting this right and ensuring that the right actors in the ecosystem are collecting the right information in terms of taxes. But the other final comment I want to make on the infrastructure bill, I think what's most notable here is that in the United States of America, this is an infrastructure bill that's aimed at bolstering the fundamental infrastructure that's going to make this country more competitive. Nowhere in that infrastructure bill is an actual focus on advancing blockchain technology, which, if you look at the strategic priorities of China over the next 5 years, blockchain technology is a core focus. The United States is falling behind. Not only is there an issue on taxes here, the bigger issue is it's just not on the radar of anyone. And there's a lot of work to do to make sure that Washington better understands the importance of this economic infrastructure.
Well, and look, there's a lot of hesitance in Washington, even with respect to something that you just did today. You announced you filed with the SEC to become a U.S. federally chartered national commercial bank. You've got the Senate Banking Committee Chair Sherrod Brown, who's highly suspicious of fintech firms, and has made it clear that he's not necessarily going to support measures like this. Why do you want to be a bank? And what do you have to say to the skeptics?
Well, so just to clarify, we have not actually filed an application to be a bank. We announced today our intention to do so under an OCC charter as a national commercial bank. Importantly, we're focused on building a full reserve digital currency focused bank in the United States. I think the key things here are multifold. I think the first is we've seen this dramatic growth in dollar digital currency models, AKA stablecoins. USDC has grown pretty dramatically over the last year and a half. We believe that over time, there'll be hundreds of billions of dollars of these types of digital currency in circulation. That's a really important set of infrastructure for the payment system. It's a really important infrastructure for how financial activity, financial markets can work. And as it grows to that scale, we believe the right form of supervision is at the federal level and is under the supervision of the Federal Reserve, the Treasury Department, OCC, and FDIC. So we want to pave that way. And in fact, if you look at the work that's going on in DC, the Presidential Working Group on Stablecoins, the attention is there. Clearly, the rise of these types of digital currencies is posing risks. It's also posing huge opportunities as well. And so as a company that's been very focused on being compliant, we want to be out in front of it at a national level. We believe this is going to be a really critical infrastructure for the future of financial markets and payments and commerce more broadly.
All right, well, we'll continue to follow you on that path. Jeremy Allaire, CEO of Circle. Be sure to tune in tomorrow. We're going to be speaking with the CEO of Kraken, Jesse Powell, as well, why he's calling out crypto executives, saying many of them have been, quote, silent or neutral on the disastrous infrastructure bill, though we heard some strong words there from Jeremy himself. You don't want to miss that conversation coming up with Jesse Powell tomorrow. All right, up next, moving the money. Amazon gets an ad revenue windfall thanks to Apple. We're going to find out how next. Plus, we've got more tech earnings this week. Tuesday, we'll get quarterly reports from Coinbase and Poshmark, and then it's eBay and Bumble Wednesday, and a big day Thursday with earnings from Disney, Airbnb, DoorDash, SoFi, and of course, we will bring you all the details. This is Bloomberg. Ad dollars that used to flow to Facebook are now shifting to Amazon. That's thanks to a shift in Apple's privacy policy that makes advertising on Facebook less effective. Here to talk about what it all means for the world's largest retailer and the world's largest social network, Tom Giles, our Bloomberg executive editor for technology. So why is this happening? It has to do with the Apple tracking app, right?
That's right. This is all about this battle between Facebook and Apple and how it's affecting all the other big tech companies as well. Apple wants to send the message to customers, we care about your privacy. Mm-hmm. One of the ways they're doing that is in a recent software update. They basically said, do you want yourself to be tracked on this app? What people are saying on the Facebook app is, no, thank you. We don't want to be tracked. What that's doing is, if you're a user of the iPhone, essentially, it's harder for Facebook to track the effectiveness of your ads. And that makes advertisers go, well, we're going to look for alternatives.
And Amazon doesn't have that issue.
Correct. One of the things that Amazon has really been pushing into advertising, and it's starting at a low base, but it's growing at a really rapid rate. The most recent quarter, we saw ad revenue for Amazon, the division where advertising is collected at Amazon, rising 87.5%. Growth at Facebook's ad business was a little around 56%. Both of those are great rates, but Amazon is clearly rising at a much faster pace. It's also grabbing share at a time when you're starting to see Google lose share and Facebook lose share.
So we're looking at the charts right now. And look, we've been talking about this potential shift for a year as Amazon was getting more and more ad dollars, but Facebook and Google still far and away the leaders. At some point, do you see Amazon catching up to Facebook and Google?
Right now, Google is at about 28, 29%. Facebook is a few percentage points below that. Amazon's really far down at about 10, 11%. They've got a long way to go. But they're certainly going to continue to push in that direction. The question is, how much do you want your Amazon experience to be affected by the prevalence of advertising? I mean, one of the things that Amazon likes to do is get you right and make it a really seamless effort for you to get in there and buy stuff on their site. The more you're bombarded with ads, the more that might affect your experience of shopping there. And anytime that Amazon starts to see advertising affect demand for the main business, which is e-commerce, I think that would make them like rethink that a little bit.
So quickly, any other players benefiting from Apple's privacy changes here?
We're definitely seeing, influencers are, there's more money going into influencers, so that's an area that we're taking a look at right now. But certainly Amazon is a big beneficiary. Again, though, it's starting from a low base, so the growth rates are going to be exaggerated there.
But also a lot of potential, right?
Absolutely.
Okay, Tom Giles, our Bloomberg Tech Executive Editor. Good to have you. Thanks so much for breaking that down. Okay, coming up, investors spooked after video game company Activision Blizzard gets a downgrade from Argus. We're going to have the latest on the lawsuits the company is facing over sexism next. And as we head to break, Warner Brothers' latest offering, The Suicide Squad, fell short of analyst estimates at the box office in its opening weekend. The film, which was also available at no extra cost to HBO Max customers, took in $26.5 million in U.S. ticket sales. Forecasts were lowered ahead of the premiere amid rising cases of the Delta variant. Opening figures for The Suicide Squad were well below other recent releases, including Jungle Cruise and the latest Space Jam with LeBron James. This is Bloomberg. Samsung's billionaire vice chair, Jay Lee, will be released from a South Korean prison Friday. A Justice Ministry committee recommended that Lee be granted parole on good behavior. The de facto leader of Samsung was sent back to jail for a second time in January after he was convicted of using bribery to win support for his succession at Samsung. He still faces other legal issues, including accusations of fraud and stock price manipulation in a case involving the merger of two Samsung subsidiaries. And Activision Blizzard taking a hit following a downgrade from Argus Research. This after the video game maker was sued last month by a California state agency alleging that female employees faced constant sexual harassment. Argus downgraded the stock to hold from a previous buy rating, bringing shares down over 1% in Monday trade. A Bloomberg exclusive report detailed how partying and sexism were long part of Blizzard's office culture, with managers hiring mostly men and dating women at the company, according to current and former employees. The California complaint, along with employee protests and shareholder lawsuits, have prompted CEO Bobby Kotick to apologize to staff. He said in a letter, "Our initial responses to the issues we faced together and to your concerns were, quite frankly, tone deaf. It's imperative that we acknowledge all perspectives and experiences and respect the feelings of those who have been mistreated in any way. I'm sorry that we did not provide the right empathy and understanding." For more now on this story, we're joined by our Bloomberg Tech reporter, Jason Schreier, author of this exclusive story. So, Jason, excellent reporting from you on this. Give us more background on this lawsuit.
Yeah, thanks so much for having me, Emily. This has roiled the video game industry over the past 2 weeks. It's been the biggest story in gaming. Essentially, the California Department of Fair Employment and Housing sued Activision Blizzard, saying it had copious sexual discrimination and harassment. A lot of the complaints in the lawsuit, a lot of the allegations centered on Blizzard Entertainment, which is kind of and a sort of autonomous subsidiary of Activision Blizzard that is also one of the most beloved companies in gaming, at least it was. It's best known for games like Diablo and StarCraft. It's always been seen as it's won awards. It's been ranked on the top of Glassdoor as one of the best places to work. So this came as a real shock to a lot of people.
So some of the revelations from your reporting, pretty stunning. Activision Blizzard enacted a 2-drink maximum at after-work functions to stave off some of the problems and cut down on drunk driving. Give us a broader picture here in terms of what you uncovered as you talked to more current and former employees.
Yeah, this is a company that back in the 90s, early 2000s, when it was first getting big, it was a company that was mostly men, but the kind of sexism was a little bit more subtle. You might see scantily clad, like animated characters on people's screens and desks and that sort of thing. But it really, once Blizzard released World of Warcraft in 2004, the company started to get fame and fortune, and some of those early employees started becoming very, very rich. Combine that with the company company's annual convention, BlizzCon, where it brought fans all out to Anaheim, California to celebrate the games and have panels with the developers and all that stuff. And some of these developers started feeling like they were rock stars. Fame and fortune essentially transformed them. And that eventually led them down a road where they saw some of their fans and even some of their coworkers as groupies. They felt like they were untouchable. They could get away with whatever they wanted. And in many ways, they could. A lot of them stuck around even after complaint was filed against them. Then back at the office, there was this culture of heavy drinking, of partying, especially in certain departments like the tech department, which we read about quite a bit in this feature, was known for having alcohol-fueled hazing rituals, people taking shots during meetings, all sorts of really crazy stuff that Blizzard just kind of harbored for a long time.
Now, this isn't necessarily a problem limited to Activision Blizzard. I mean, you've done a lot of extensive reporting about sexism in the industry at large. I mean, is at this level, at this extreme level, do you believe this, is something we see repeated in video game making cultures elsewhere, or is Activision Blizzard an extreme example?
No, that's a really important point, Emily. This is a systemic industry issue across the video game industry. Very similar to tech, the video game industry is dominated by men, especially at the highest leadership highest leadership. I mean, look, if you look at the history of the modern video game industry, it really started in the 80s and the 90s, and it was mostly men who started a lot of these companies. And so if you look at a lot of these companies like Blizzard that were founded back then, people in the highest positions there tend to be men who started 30 years ago. And now we have a new generation of people. Fortunately, we have a new generation of very diverse game makers, women and people of color and other people who don't fit into that kind of nerd stereotype, quintessential game developer, but not a lot of those people have been able to ascend through the ranks. Some of those people have been burnt out. And yeah, so we're seeing stuff like this across the industry. Maybe Blizzard is unique in that it had that kind of rock star element to it that not a lot of other game studios had, but I am sure that a lot of female game developers all across the industry were reading some of these allegations against Blizzard and saying, yep, been through that, been through this pay discrimination, been through being harassed at work and asked out and reporting it to HR and HR not doing anything. Just a lot of stuff that women see everywhere, unfortunately.
Well, Jason, really appreciate your detailed and extensive reporting on this. Of course, it's important because everybody plays games, not just men, and increasingly, more and more women playing those games. Jason Schreier, thank you so much. We'll continue to follow your reporting on this. All right, coming up, pressure mounting on world leaders to rapidly address climate change. We're going to take a look at the landmark report out by climate scientists warning that time is running out. That is next. Plus, later, as the Tokyo Summer Games wrap up, we're just 6 months away from Beijing hosting the Winter Olympics, but a number of challenges stand in the way. That's ahead. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. In a landmark climate report issued by the UN, scientists give a stark warning. Time is running out. The report goes on to sound the alarm on climate change and issues a code red warning for the human race. Key takeaways: that the last decade was hotter than any period in 125,000 years, and there's no end in sight to rising temperatures before 2050. For more, I want to bring it over to our Bloomberg News reporter, Ed Ludlow, with the latest. Ed, certainly alarming. Yeah, it's alarming, this scenario of global temperatures rising 1.5 degrees Celsius over the next 2 decades. The report is clear. This is human action that causes this. And it is something that is done through industry, through companies. And so if you're an investor, how do you think about this? We know that investors are becoming increasingly conscious about climate risk, about
environmental considerations. This is data from Bloomberg Intelligence on the number of shareholder proposals across ESG, social and climate. But the orange boxes are those approved specifically on climate proposals, and that they have jumped 75% over the last 12 months. What's so astonishing about this data that Bloomberg Intelligence crunched is that the level of shareholder approval for each proposal is significantly higher for climate-themed proposals than it is for social. This is at the forefront of investor consciousness. I've also been looking at some other data from Bloomberg and MSCI. The climate change theme score, if we bring up the next board, this is a number that is assigned to a company, to a sector, to a country based on their performance in things like energy efficiency, de-risking against climate through insurance, their carbon footprint. And you can see some surprise and some non-surprise in the sectors that perform well. 10 is a perfect score, by the way. So you see healthcare up there is kind of leading the pack. And then technology, that might be a surprise, right? Data centers are energy intensive. You have heavy industries associated with tech, but that scores well. Down the bottom, less of a surprise, energy does not score as highly. And then if you look geographically, one might assume that United States leads the way. Not so. If you actually look, they're the middle of the pack. It's really Western Europe, the United Kingdom, that score much more highly on this climate change theme score. And down the bottom, Emily, China, real big consumer of commodities, real big place for heavy industry. But there's some really fantastic data on the Bloomberg terminal that if you dig into it, you can see investors increasingly are looking here, especially in the equity markets, on how they're making investment decisions. Emily.
All right, Ed, thanks so much for breaking that down. Great charts there. Appreciate it. Our Ed Ludlow. For more now on the climate crisis, I want to bring in Chad Anderson, founder and managing partner at Space Capital, an early-stage venture capital firm that invests exclusively in space-based technologies, out with a new report about how these technologies can help us tackle climate change. So, Chad, how exactly do you see space technology playing a central role in climate change?
Well, the fact is that we wouldn't know about climate change if it weren't for satellites. And so what we tried to do in this report was really to show the foundational role that space technologies and satellite data plays in climate markets and in enabling climate markets. And so, you know, half of all the essential climate variables that we're tracking come from space, and 99% of weather forecasts and weather data comes from space. So it is front and center and right in the middle of this conversation.
So, you know, how much of this tech, you know, one of the criticisms of space is that, you know, the exploration, the real world impacts of space so far out there. How many of these technologies are ready now? How many of these technologies are in their infancy and going to take years to play out?
Well, I mean, it feels in one sense that we've been gathering this data for decades, and it's come from early NASA missions. And so we're sitting on a pile of data, but we're really, and this is what came out of the report today, is we're starting to feel the impacts. I mean, you don't have to be a climate scientist or anything, you know, an expert to understand what's happening. You just have to look out your window and watch the news and see the impacts affecting our daily lives and affecting businesses. So we have solutions that are in place. There are big gaps in the data. We need more sensors in space. That's a lot of what we're funding right now, is to help fill in those data gaps, to enable the climate markets to have measurable data that can that then products can be built on top of. And so all throughout the life cycle and the flywheel of climate markets is really what we focused on in this report, the opportunity for investors.
Now, Jeff Bezos recently went on an 11-minute trip to space with Blue Origin, and you helped us narrate that coverage so well, Chad. Thank you. We were the first to interview him on the ground, and I asked him about the skeptics and the critics out there who say, why are you investing in space when your money, your time could be better solved helping us on Earth? Take a listen to his response to that.
What we're doing is we're building infrastructure. This is a road. We're building a road to space so that future generations can build the future. We live on this beautiful planet. It's the most beautiful planet in the solar system by far. And we have to keep it safe and protect it. And the way to do that is slowly, over decades, to move all heavy industry, all polluting industry out into space. That's what we're going to do so we can keep this planet the gem that it is.
Chad, do you think Bezos' idea is A, realistic, B, the real solution, moving industry to space?
Well, this is really long term, and there is, it's a goal to work towards, certainly. I like this idea of zoning Earth residential. There's already talk of moving heavy industry off planet. The space economy today is made up mostly of geospatial intelligence, GPS, and communications. 95% of the market is in those things right now, and that's the data from satellites and what we've been talking about. But the thing that I think we haven't wrapped our head around yet is how fundamental Starship is going to change how we interact with space and how accessible it's going to be when that vehicle comes online. The ability to launch 100 tons to orbit, refuel, and go to further destinations. This is going to open up all types of applications that we haven't seen that weren't feasible previously. And there's a $100 million gift that was given to explore solar power generation from space. And that's one effort, and there's many others similar to that are happening around the world.
So speaking of satellites, SpaceX just made their first acquisition in 19 years, acquiring Swarm Technologies. They've got Starlink, Amazon has Kuiper, there's Planet Labs, all of these different satellite companies competing to be the eyes and ears of the world. Do you see consolidation in this space? Who wins?
Well, SpaceX is certainly the apex player. There's a number of others that are talking about doing things. SpaceX is the company that is taking us consistently and regularly to orbit, whether it be satellites for climate companies or for other applications. But other than them and Rocket Lab, those are the two commercial companies that are taking us to orbit. So, you know, they've certainly got a head start, and are the ones to watch.
So what companies are you betting on right now? If there's money to be lost, obviously, if we don't invest in protecting the Earth. There's also money to be made if you invest in the right companies. What companies are you putting your bets on now where you think that this is actually going to turn a profit?
Well, sticking to climate, we're seeing a lot more companies and founders use these new tools and access to space in ways to develop really interesting technologies. And so one of the companies that we've invested in is GHGSat, and they're the first and only company that's able to track facility level emissions from space. So just in Q2, I think they identified 150 megatons of carbon emissions. So this is a really interesting capability. Partners up really nicely with MethaneSat. It's an initiative by the Environmental Defense Fund. Those two things are going to work really closely together to give us a full solution. But on the market side, I mean, the most important thing that's happening on the climate side is really around markets and getting this measurable, accountable data. And so there's other companies that are building the solutions that are, the applications that are built on top of these data sets. And we're looking to invest in this surge in investment interest. $50 billion is expected to be invested this year into the category. And so we're looking at this very closely.
All right. Chad Anderson, Space Capital founder and managing partner. Always appreciate having you here. Thanks so much. Coming up, the lowest skilled jobs have been hit the hardest by the pandemic, while jobs that require a higher education and training proven to be more resistant in times of economic downturn. I'm going to speak with Guild Education founder and CEO Rachel Carlson next about their mission to upskill workers in a new normal. That is next. This is Bloomberg. An update now on the pandemic. The Pentagon will now require members of the U.S. military to get the COVID-19 vaccine by September 15th. The decision comes as new cases in the U.S. last week rose to the highest weekly levels since early February, fueled by the highly transmissible Delta variant. Deaths rising 49%, the biggest weekly increase since December. These latest headlines, a reminder that life will not be returning to normal anytime soon. And for the unemployed, the news gets even tougher. Roughly half of U.S. governors have ended unemployment benefit programs created during the pandemic. Our next guest hopes to help those in need. Her company, Guild Education, has programs to help upskill employees. Rachel Carlson joins us now as part of our weekly work shifting segment to discuss. So Rachel, first of all, you have such a unique view into the trends employers are seeing, workers are seeing across the spectrum. What are you seeing mid to, and dare I say, post-pandemic in terms of who's losing their jobs, who's able to keep their jobs, and who wants to change their job?
It is a fascinating landscape right now, one full of real opportunity, right, for American workers. I mean, there is more influence by the employee than the employer than we've seen in most of the last 15 years, but it's devastating for a number of populations. I think women are a really interesting example. Obviously, last week's job gains look fantastic on paper, but when you think about the fact that 2 million women left the workforce over the last year, we're only inching our way back to baseline. We need 5 more months of last month's recovery to even get back to pre-COVID. So really depends where you look and how you analyze the data.
Right. I'm really worried about women backsliding in the pandemic and not making up for what we lost just in the last 18 months. You work with companies like Walmart, Disney, Chipotle to help upskill their workers. What are these companies asking for? What are these workers asking for? And what do they need?
Yeah, so the future of work has arrived. It's here. It's no longer in the future. Companies have been preparing for that for quite a while, but workers are realizing it today and in a very present and urgent way. We are seeing actually a fair amount of alignment as a result. There are employers saying, hey, this job, the cashier, right? America has 3 million cashiers today. Most companies are going cashierless in the next 5 to 10 years. But what are we going to do with those cashiers? Some companies might lay them off, but many are saying, how might we reskill that population and make them prepared for the next job, whether that's working in the pharmacy as a pharmacy technician or moving into a clinical role where the customer service that makes you a great cashier could actually give you a great bedside manner. It's that you just don't yet have the technical skills to, say, draw blood or be a clinical technician. And so thinking about how do you help folks in the $10 to $15 an hour wage move into $15 to $20 and then $20 to $25 roles, it is really interesting because it aligns the desire of the employee who's looking for what's next for them with what employers need, which is to prepare their workforce for the workforce of tomorrow.
You found that 26% of workers plan to look for a different job post-pandemic. Why is that? Does it have something to do with the flexibility that employers are or not giving employees?
I think it comes down to nearly everyone spent time in their house last year thinking what they wanted out of life. And what we're finding is that employees, especially in a world today where wages and healthcare are now quite commoditized, right? $15 an hour is really becoming the floor, and therefore it's becoming quite ubiquitous as a narrow wage band. And healthcare is now rightfully becoming more of a right than a privilege. What that means is workers are then saying, okay, how do I differentiate between the company I want to work for? And the number one thing we're seeing is that millennials, Gen Z, but even boomers want to work at a company that provides career development. Now, that doesn't mean they're promising you a job in the future, but it means how are you giving me the opportunity to develop skills so that I'm capable of the next job? Because I'm pretty sure today's job isn't going to stay the same for 10 years from now, the way it did for my dad. And that's what workers are asking for. And so we're seeing that the companies that are offering education and upskilling are the ones that are winning today's war for talent, and they're pulling people from one company to the next.
Now, you're doing some interesting things at your own company in order to, focus on retention, giving equity to all employees. You recently raised money at a $3.75 billion valuation, which is huge. And you also have a unique view on the wealth tax, which I find interesting given that, obviously if Guild ends up being incredibly successful, you will be very wealthy. I'd love for you to share some of that with us and how other companies might be able to learn from that and work some of these ideas into their retention and benefits policies.
Yeah, I'm happy to talk about it, though, as you know, I haven't talked about this much until just last week, and this will be the first time I guess I ever talk about it live. I believe I stand on the shoulders of privilege and giants. I don't believe I'm self-made. I'm lucky and privileged to be where I am. And I think it's unfair that I pay a lower tax rate than a lot of my employees, and certainly than a lot of the 4 million Americans who have access to Guild through their companies as frontline workers. I just don't think it's right. And so I feel grateful. I believe in capitalism, but I believe that it's probably time we start thinking about how to make sure that capitalism operates with the privilege of democracy rather than democracy being dictated by capitalism. And so, grateful to have made more money than I ever anticipated in my life, but really, really focused on making sure we build more companies that solve problems and continue to use capitalism as a tool for innovation rather than a tool just for wealth capture.
Rachel, I appreciate you sharing all of that with us. Thank you. And for the first time on live television, Rachel Carlson, Guild Education founder and CEO, will continue to follow. Appreciate your thoughts across the spectrum there. Thank you. Coming up, consolidation in the online betting world. We're taking a look at shares in Golden Nugget, up more than 50% on news that DraftKings agreed to buy the online gaming company. More details after the break. This is Bloomberg. Chinese e-commerce giant Alibaba has fired a manager accused of sexually assaulting a female staffer. The employee's account of the ordeal went viral on social media and ignited an online debate about rampant sexism across China's tech industry. Two executives, including an HR chief, have also left the company for mishandling that incident. Amazon is ending its joint venture in India with billionaire Narayana Murthy, the move seen as a potential setback for the e-commerce giant as India's online market continues to surge. The idea of the now 7-year-old business was to train and bring on the Amazon platform new local merchants like weavers, other artisans, and women-led startups. Amazon has come under fire in the country for business practices that small retailers say are unfair and illegal. DraftKings is expanding its presence in the hot market for online betting. The fantasy sports giant agreed to buy Golden Nugget Online Gaming in a deal valued at more than $1.5 billion. The deal gives DraftKings more casino-type betting games. Plus, it'll expand its market share in sports wagering. Meantime, as the Tokyo Summer Games draw to a close, preparations are well underway for Beijing to host the Winter Olympics in just 6 months. But there are a number of challenges ahead, not least of which a resurgence of COVID cases in that country. Bloomberg's Annabelle Drollers has more.
Beijing is promising a successful Winter Olympics in February. Still, a number of hurdles stand in the way, starting with transporting athletes and delegations. Officials are yet to share quarantine plans, with borders now largely sealed off. Even full vaccination against COVID may not guarantee easier access. There's evidence China's shots offer less protection against the Delta variant. International fans could be limited, but Beijing may allow home crowds capped at 2/3 of venue capacity. For other social distancing rules, organisers will have paid close attention to the Tokyo playbook. We could again, for instance, see winners putting medals around their own necks. Infrastructure is where Beijing can shine. State media says all construction work is on track. But what about the snow? Skiing events will be staged in a desert averaging 8 inches of coverage per year. And China will be relying entirely on artificial flakes. That's raising environmental concerns. And then there's human rights issues. Some are calling for a diplomatic boycott of the Games. Critics, including US lawmakers, want a change in Beijing's stances on Hong Kong and Uyghur Muslims. Pressure is being applied to key sponsors, including Coca-Cola and Visa. China says any rational company will respond with the right judgment, particularly those who have benefited from its breakneck growth. With these games, Beijing has a chance to dazzle the world. Officials are said to want at least 5 gold medals. Another challenge for a country historically weak in winter sports.
Bloomberg's Annabelle Drollers there. All right. That's it for Bloomberg Technology. As the curtain falls on the Tokyo Olympics, delayed and curtailed by COVID-19, Japan's athletes can chalk it up to a triumph, having bagged more gold medals than ever before. For Prime Minister Yoshihide Suga, it's more of a letdown, unlikely to improve his chances in a looming general election or provide much of a boost to the economy. Bloomberg's Kurumi Mori reports.
The closing ceremony wrapped up the 32nd Summer Olympics in Tokyo, marking the end of one of the strangest games ever. Outside the stadium, protesters rallied over concerns about the cost of the event and the coronavirus in Tokyo, while inside, athletes waved to cameras, volunteers, officials, and press instead of to spectators. One of the flashiest moments was the floating Olympic rings, which was done by CGI. Many thought it could be drones because in the opening ceremony, more than 1,800 of them took to the skies, forming shapes in the air, including a globe over the stadium. All that aside, the Olympics came with some controversy. Before the start, organizers announced fans would be banned from most venues, putting a damper on the excitement. Now that it's over, some local residents are focusing on the positives.
テレビを見てみたら無観客は致し方ないとして無観客は無観客で選手やコーチの息遣いが聞こえるなっていうこれはこれで悪くないかもってもう何でもいいからポジティブなもう宝物拾うように考えていますもう悪いことばかりではないと
競技自体はすごく感動する場面いっぱいありましたし、その開催が良かったかどうかについては、疑問が実際残っている部分はあると思いますけど、さっき言ったように競技自体にはすごくいいものを見させてもらったと思います。
There were plenty of firsts at the Tokyo Olympics. Countries like the Philippines and Bermuda won their first ever gold medals. New Zealand weightlifter Laurel Hubbard became the first out transgender woman to compete in the Olympics. And there was 4 new sports. Skateboarding, climbing, surfing, and karate all made their debuts in these games. Plus,
Michelle Kumimori there for us in Tokyo. That does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by Coinbase President and COO Emily Choi, as well as Kraken CEO Jesse Powell. I'm Emily Chang in San Francisco. This is Bloomberg.